A Look at Finance is underwritten by Janney Montgomery Scott, trusted advisors for generations.
Welcome back. It's Thursday. Stephen Carleton here with our weekly look at finance. We didn't see you last week. Welcome back.
It's great to be back, David.
Great to have you here. We've got a lot going on. Let's just start at the beginning. The markets year to date. We've got some impressive numbers coming out in the markets year to date. You've got a little graphic to share with us to look at that as well.
Yeah, no matter how you look at this, the three major indexes, whether we look at the Dow Industrial or the S&P 500 or NASDAQ, we're looking at double-digit growth. In the case of the Dow, we're seeing 22%.
Yeah, let's take, if we can take the graphic that we have here, looking at these numbers.
Yeah, so you're seeing 22%, up 2% just for the month, and this is as of this afternoon, up 25% for the S&P 500 and over 30% on the NASDAQ. And NASDAQ is that technology, information technology, those tech stocks. And so we've had an incredible year of growth, and it's been a number of things that have driven it, but most people should be very pleased with how things are looking.
You know, we're talking about this growth in the markets, not so much growth in other areas. So, you know, there's a bit of a disparity there in what's going on in the markets and what's going on in the economic picture in general.
Sure. You know, sometimes the stock market doesn't always lead or lag the overall economy. You know, the Main Street isn't necessarily Wall Street. And so what's happening in the stock market doesn't necessarily mean that it's mirroring what's happening on Main Street. And we've talked a lot about that this year, that a lot of the things we've seen happen in the U.S. stock market hasn't necessarily translated to the middle class in America. And that's been part of the challenge that we've seen.
The Federal Reserve may be getting on the bandwagon and saying that the economy is getting better. Quantitative easing, talking about kind of taking the foot off the pedal on that and actually stopping their bond buying ways. Talk to me about that, because that decision just came out.
Yeah, this is big news. We've been waiting for this for a number of months, and it's a result of, I think, of the change of leadership that we're seeing. Ben Bernanke is going to finish his term at the end of January. And it looks very likely now that Janet Yellen will be confirmed by the Senate. And she's known as being somewhat dovish, and she's indicating that, you know, she's less focused on the stock market and more focused on unemployment. Okay. And so we've seen some indicators that she's going to be focused more on the middle class, more on the job market.
All right, so bond buying, they may scale it back. Currently, they're what, 85 billion a month?
So 85 billion a month.
Currently buying.
Yep, and it's 85 billion a month, and they're going to scale it back. And don't think of it. And some people are saying, well, they're going to turn it off altogether. And I don't think that's likely to happen. I think what we see is that they dial it down. Maybe it dials down to 75 or 65 billion a month, and that's probably going to start. You know, the general opinion is probably going to start to wind down, coming in somewhere around March.
All right. So Janet Yellen, she is being considered for the Federal Reserve. Would be the first female leader of the Fed.
That's right.
She's ambitious with this unemployment, how she wants to cut unemployment. So currently they want to cut unemployment, what, 6 to 6.5%?
That's the goal currently, yep.
But she's going even further, 5.5%, a whole other percentage point lower.
Yeah, I think one of the things that she's acknowledged is that we've seen since quantitative easing has started that we've driven the stock market, we've driven the equity market, we've saved the bond market in many respects, but we haven't seen a particularly large degree of that translate or trickle down to the general economy. And so I think one of the mandates that Janet Yellen has been promoting is to refocus more on the Main Street of the country as a driving factor.
All right, let's head over to Main Street. Quick market view, some key numbers, retail sales, housing, and energy. Talk to me about these numbers that are posted.
So this week has been a bunch of mixed numbers. Here's what we're noticing. You know, the Dow closed today at all-time high, over 16,000. And what we're noticing is it doesn't take a whole lot of good news to keep the market rallying. And so the numbers have been weak, mixed, but still on the positive side. And so we've seen some of these numbers come out, and they're not bad, they're not great, but there's just enough indicator that the market is still moving, the market's still growing. And so we're seeing that kind of looking for the silver lining continue to play out. The unemployment numbers better than expected. So we're seeing things get better, not robust growth like we're expecting, but at least they're not going backwards.
Yeah, talking about unemployment, let's return back to our top story, which is General Electric. Making it official today. We've been talking about this for quite some time. Union talks broke down over the weekend. Not even broke down, they were pretty much non-existent. They didn't get anywhere with this. GE notifying its employees today they will close their plant, move their jobs to Clearwater, Florida. 200 jobs lost in the Fort Edward area.
Yeah.
We've got some interesting numbers I want to share with you and then get your feedback on the other end. So if we take a look at our first graphic, Elton, this is, and Elton's our director, that's who I'm talking to.
That's right.
Not just the voices in my head. A machinist salary in Fort Edward, they're making over $44,000 a year. In Clearwater, Florida, because the unions aren't as strong there, 36,000, you know, just over 36. If we go to the next one, an engineering technician, an industrial engineering technician, in Fort Edward making $51,500. You move that job to Clearwater, Florida, GE, you know, making a sizable savings on that, about $12,000 savings on that employee. So for GE, this makes perfect sense for them to cut their bottom line.
You know, it's difficult. It's frustrating. GE is a huge employer for the area, no doubt about it. I mean, they're the major employer, but this is one of the segments of their industry that didn't make the financial sense. And I think the union made a valiant effort of cutting back, lowering the amount of labor that was there in Fort Edwards, but there was just too much a cost disparity that's going on. And no matter, you know, the best effort of the union to kind of lower those costs, you know, as you can see with those numbers, that's a big gap to make up for.
Yeah. You know, it's going to be a huge hole in the Washington County community. GE announcing those 200 jobs will be gone by September of next year.
And it's unfortunate because most of those jobs are really well-paying jobs in a community that's incredibly dependent on them.
Yeah.
You know, we've seen some growth in jobs, you know, several, I think 400 or 500 jobs, 400 plus anyways, in the area that GE has created.
In the Schenectady area.
That's right.
Yeah.
So it's made up for it, but this town is going to definitely feel it.
Definitely going to feel it in Washington County. Well, it's a little bit of give and take. Some other great economic news today. Nano Buffalo, the governor announcing going to do the same thing they've done in Albany and in Utica. Two Californian companies investing over $1.5 billion to move their operations there. And then Ford announcing also out in Western New York, $150 million for a stamping plant there. It's going to save 640 jobs, create 350.
It's interesting to see as Cuomo is starting to move to the west, his focus, his gaze, and certainly that part of New York has not seen a lot of good news, a lot of growth in that area. So it's vital for them to draw that kind of talent. And it's interesting to see them moving it from California to this area. So very, very interesting investment
California, Buffalo, it seems like it would be comparable. You don't bother taking your shorts with you.
I hope they took pictures of the summertime, what it looks like there, because they're in for a big surprise this winter.
Yeah, a big surprise this winter once they get to Buffalo. Of course, good news from the governor's office. The folks in GE Fort Edward, just more reeling for them because they say the governor was non-existent in their negotiations there.
It's particularly tough when you have when the governor picks winners and losers and these kinds of things. There's a lot of people that no matter what happens end up very disappointed, and it's unfortunate.
All right, Stephen Carleton, thank you so much for
Thanks,
our
David.
Look at
Always a
Finance.
pleasure.
Always great to see you.
Thanks.
Now, to see this segment and all our segments, head to the website. It is looktvonline.com. We post it there each and every week.